All right, let's get right into it. Today, we're looking at Reddit, a company that's become a real battleground stock ever since its IPO. It's this fascinating story of absolutely incredible growth that's clashing with some pretty deep skepticism from the market. So the big question we're asking is this: is Reddit sitting on a digital goldmine of human data for the AI age, or is it all just a bunch of hype?
And this, right here, is the paradox that makes Reddit's story so compelling right now. I mean, the company just posted a phenomenal quarter. We're talking revenue soaring 70% year over year. And yet, the stock is down about 45% from its peak. That's a huge disconnect between how the business is doing and how Wall Street feels about it. So, what in the world is going on here? Let's unpack it.
The answer to that puzzle really starts here. You have to understand, this isn't the same old Reddit from a few years ago. Its business has been totally transformed into this powerful new engine that's changing the whole game for how it makes money. So on one hand, you had the old Reddit. It was mostly about, basic ads for brand awareness. But the new Reddit, it's a much more sophisticated two-pronged machine. First, you've got this mature AI-powered advertising business that's driving real results. I'm talking app installs, direct purchases, things that actually doubled in revenue year over year. And then you have the real game changer, a whole new, super critical arm of the business that's licensing its massive archive of human conversation to train AI models for giants like Google. And this brings us to the absolute core of Reddit's value today, what people are calling the human data moat. Just think about it for a second. The internet is getting flooded with AI-generated articles, AI reviews, AI comments, and as that happens, real, authentic human conversation becomes incredibly rare. And because it's rare, it's incredibly valuable. Well, Reddit's archive of raw, unfiltered human discussion, it's one of the largest on the entire planet. And this quote from CEO Steve Huffman just captures their whole pitch perfectly. Reddit is the most human place on the internet. In an age where everything is becoming AI-generated, that claim to authenticity, well, that's their key differentiator. It's the foundation of their entire AI data strategy.
Okay, so let's get to the latest earnings and see how this new engine is actually performing. Because the numbers we saw from the fourth quarter of 2025, they aren't just good, they're pretty staggering.
So the company brought in $726 million in revenue. That's a 70% jump from the year before, and it absolutely crushed what analysts were expecting. This also marks their sixth straight quarter of over 60% revenue growth. That kind of consistent hypergrowth is just so rare, and it really shows this new business engine is firing on all cylinders.
And get this isn't just growth for the sake of growth. Reddit is incredibly profitable. It posted a 35% net profit margin. Now, what that means is for every single dollar of revenue it brought in, 35 cents was pure profit. With gross margins over 90% for 6 quarters in a row, this business is a legitimate cash-generating machine. And remember that AI-powered ad engine we mentioned? Well, it's actually accelerating. Ad revenue grew 75% year over year, which outpaced even the company's fantastic overall growth. It's a huge signal that advertisers, from the little guys to the big enterprises, are seeing real value and are putting more and more of their money into the platform. And finally, the platform itself is just getting bigger. Daily active users climbed to 121 million. That's a really healthy 19% jump from the previous year. So more people are using Reddit, and they're using it more often, which is the fuel for this entire engine. Okay, so with a business that's performing this well, record growth, record profits, record users, it brings us straight back to that central question: why the massive disconnect with the stock price? This, right now, is the heart of the debate on Wall Street. This table really breaks down that core conflict. On one side, you have the bulls, the optimists, who see a generational opportunity here. And on the other, you have the bears, the pessimists, who are pointing to some pretty serious risks on the horizon. Let's break down each argument. So the bulls, they look at all this and they see a high-growth AI powerhouse that's trading at a discount. They're pointing to those 6 straight quarters of over 60% growth. They see that human data moat as an absolutely irreplaceable asset. Some are even calling it the new oil for the AI industry. And they're looking at that massive profitability and the new billion-dollar share buyback as a crystal clear signal from management that they believe their own stock is deeply undervalued. But the bears see some serious clouds gathering. Their first point is that growth, while it's still strong, is guided to slow down to around 53% in the next quarter. The second, you've got these regulatory risks, like the EU AI Act, that could potentially throw a wrench in those data licensing deals.
But the third point, that's the one that really has investors worried.
So, the single most crucial point for the bear case is stock dilution, and it's actually captured perfectly by a user on Reddit's very own stock-focused subreddit. The big concern is all about stock-based compensation. Bears are arguing that the company is giving so many new shares to its leadership team that it's watering down the value for every other shareholder. It's kind of like this. Imagine you own a slice of a pizza. If the company just keeps adding more and more slices to the pizza without actually making the pizza any bigger, your slice becomes worth less. That's the fear here, that all these new shares are eating into the potential upside from the business's incredible growth.
So you've got these two powerful competing stories. And because of that, the path forward for Reddit stock is really going to depend on how a few key things play out over the next several months. So here are the 4 key signposts you need to watch. First, Q1 2026 earnings. That report will tell us if that growth slowdown is a new trend or just a one-time blip. Second, keep an eye out for any new data licensing deals, and more importantly, whether they can get higher usage-based pricing. Third, any rulings that come out of the EU on data usage will be critical. And finally, we're going to see if that billion-dollar buyback program actually starts to reduce the share count and push back against those dilution concerns.
And all of this leaves us with the ultimate question, the one that will really determine Reddit's long-term value. Is its massive archive of human conversation like a finite oil well that AI companies will eventually drain dry? Or is it more like a constantly flowing river, where new conversations and new communities are always creating a perpetual resource that's going to fuel the AI revolution for years and years to come? The answer to that question will tell us, once and for all, if Reddit is truly an AI goldmine.